1310 WIBA and Ask the Experts. Really excited this morning to welcome a new guest to our program, Tom Plumb. Tom is a CFA with Wisconsin Capital Management. You can learn more about Tom as well as Wisconsin Capital Management all on their website, WISCAP.com. That's all one word, WISCAP.com. Just kind of rolls off the tongue nicely. Tom, how you doing this morning?
Well, I'm doing wonderful, Sean. It's great to have a chance to chat with you.
You know, it's fantastic to finally get a chance to do this on the radio. You and I have had a chance to meet the past couple of weeks and talk a little bit, get to know each other, and really excited to get the opportunity to share with folks a little bit about you and what it all is that you do at Wisconsin Capital Management. Before we get rolling kind of into the specifics, let's kind of do a little bit of a background. I know you've been in the financial industry for over 30 years, and I wonder kind of what brought you into this field and what's kind of your background there, Tom?
Well, I joined this business basically for two reasons.
Mm-hmm.
One, I wanted to positively impact people's lives by helping them, navigate through the really critical issues of financial security for themselves and for their families. And secondly, I really like to analyze complex issues and distilling them down to actionable items. And there's very few things as complex as economics and financial market interactions.
You said that is for sure, and that was one of the things. As I mentioned, I had a chance to meet with you before we started doing the show. I said this guy's really good at kind of distilling things and really getting things nice and concise. So let's talk a little bit about the history of the business, Wisconsin Capital Management, and of course your role in its evolution.
Well, sure, Sean. We started this business with some partners in 1984, and basically we manage investments for wealthy individuals, pensions, profit-sharing plans, foundations, and many clients liked how we managed their retirement accounts, and they asked us if we couldn't have some type of ability to handle smaller pools of money. So we started a balanced mutual fund, and balance means both a philosophy, but it also means an allocation on how you distribute assets when you're managing a portfolio. Started that in 1987, and then I started a trust company in the year 2000 because we thought that it was really important to not only provide good investment management services, but have it apply to people's individual lives. We sold the trust company in 2019, and then Nathan at Plumb and I decided to focus on analysis and portfolio management for our mutual funds and for high net worth individuals.
Oh, that's fantastic. Nathan Plumb, same last name. I'm going to guess there's a relation there, isn't there, Tom?
I've been very fortunate that the best person I've had to work with in these 40 years is my son, Nathan.
Well, that's great. Real quick, too, I'm going to ask you a little bit about kind of, seeing the different cycles. But before we get to that, a little bit about that is one of the great things about Wisconsin Capital Management and how you're structured. You mentioned your son, Nathan, is one of the things I think a lot of folks think about with investing. Obviously, thinking long term, they're going to say, wondering, are they going to be here in 20, 30, 40 years? One of the great things with what you're able to do with you and your son is you're there for the long haul. So people that develop relationships with Wisconsin Capital Management now, this is something that we talk about, all your expertise and, of course, working with your son. This is really something that you're going to be there for the long haul, isn't it?
It's the whole purpose. We've tried to work with other partners and with other organizations, and we realized that having a continuity of not only the management, the processes, but the philosophy and how you allocate your time and what you think about how you should relate with your clients, we wanted to make sure that we had a structure that would keep going and that we were in control of, so that there wasn't a situation where we merge with some other company and all of a sudden they have complete different goals on client service and portfolio management. So this is a great thing for us. I tell people that I'll continue to do it with Nathan as long as he thinks I'm an asset, as long as my clients think I'm an asset, and as long as I'm able to do something like this that I really enjoy doing with people I enjoy doing it with, and then I have an opportunity to talk about it with people like you, Sean. So it's a best of all worlds for me.
Well, it's great to get you on the air this morning as we talk with Tom Plumb, CFA with Wisconsin Capital Management. You can learn more about Tom. You can learn more about Nathan. You can learn more about Wisconsin Capital Management, all on their website, wiscap.com. That's WISCAP.com. That's wiscap.com. Of course, this is Ask the Experts here on 1310 WIBA. Get to know Tom and a little bit about Wisconsin Capital Management. And Tom, also one more thing before we get to the next thing about kind of managing things through market cycles. You mentioned also kind of your personal drive, and of course, you talked a little bit about your history, having been involved in this world for over 30 years. You are somebody. You live this stuff. This is like deep, almost deep in your DNA. This is really something you love doing, isn't it?
Oh yeah, if you ask Nathan or anyone else what our dinner conversations are, what our breakfast conversations are, it's first thing in the morning, checking the markets, checking on what developments might affect the markets throughout the day, talking about the activities, and then more importantly, putting it into the perspective of the longer-term issues. We watch everything that happens every single day, every single hour of the day, but it's really developing that perspective to put it into context of the longer term and what you're trying to accomplish.
Let's kind of look then, as you talk about kind of long term and having the opportunity to look forward, and of course having the opportunity of experience. Obviously, there have been some lessons learned over the years. For you, kind of what's that biggest lesson you've learned from managing money through different cycles and having seen a lot of different market behaviors? What's kind of the biggest takeaway for you, or the biggest lesson, Tom?
Well, first of all, Wall Street is very good at developing products that help Wall Street.
Mm-hmm.
And they usually, by the time a trend is identified or a correlation or something like that, and they come up with a product for that, often it's after the fact. But the couple fundamentals that stick with the markets throughout cycles is that if you have companies that can grow, can identify them, watch them, make sure they're executing, that is a way that stocks can add value. From our perspective, if you can find companies where the management understands their environment, has a great balance between their clients, their customers, their employees, and the overall environment, and then can execute a growth plan, that's a way that you compound and add value. The stock market, there's many different tools that people come up with about managing risk, but the one that has worked consistently through all cycles is that if stocks can provide you the most return of an equity investment, a publicly traded equity investment, over time, they're volatile. So modify that volatility by having something that can offset it. And that usually and intuitively has been high-grade, short-term investment bonds. Fixed income can moderate the volatility of an overall portfolio and allow you to become a long-term investor. And the real key thing is to fundamentally understand why you're investing. Look for investments that can grow, because the eighth wonder of the world is compounding and time. And so for our perspective, you look for growth companies, you look for well-managed companies, and how they execute.
That is great to hear as we talk. Really interesting stuff this morning with Tom Plumb, CFA with Wisconsin Capital Management. You can learn more about Tom and the team all online, wiscap.com. That's wiscap.com. That's WISCAP.com. WISCAP.com. Getting some market and economic insights from Tom this morning. And not a day goes by. We're in our very news here on 1310 WIBI. I don't hear a story about interest rates. Obviously, they've been a very hot topic. How are they impacting investment strategies these days?
Well, definitely interest rates are modestly restrictive right now in today's environment. When you have Interest rates that are, short-term rates around 4%, longer-term rates of 4.5%. When interest rates are 2 to 3% over the embedded inflation rate, that's modestly restrictive, and that's where we are right now. But the calls for rates to dramatically come down, you don't want to see that. When rates come down dramatically, it's because everything has hit the fan. And what we do want to see is a predictable environment that is not structured to stop the economy. And by that I mean the Federal Reserve Bank has many times decided that inflation was too high and they raised interest rates dramatically, and that puts everything on hold. So right now, modestly restrictive, but still allowing growth in the economy. So selectively, I think you can find companies that can enhance your portfolio.
Talking this morning with Tom Plumb. He is with Wisconsin Capital Management, talking a little bit about the market and economy. We're also going to get into a little bit of Tom's investment philosophy, as well as some other planning and advice as we talk on Ask the Experts this morning with Tom Plumb, CFA with Wisconsin Capital Management. You can learn more about Wisconsin Capital Management on their website, wiscap.com. That's WISCAP.com. We'll also put the podcast out right after the program. If you've missed any part of the show, you can always listen back to the podcast on any platform. Just type in Wisconsin Capital Management and you will find that podcast. And Tom, as we kind of get into some of the sectors and other themes, what are some of the ones that you're seeing out there that you're most optimistic about in the next year or 18 months or so?
Sean, we are in a time when there is incredible amount of innovation and change in how we pay for things. And old rules about currency, about paying with cash, paying with checks, those things are disappearing, and we're even seeing things like tokens and stable coins. The financial service industry, those companies that are providing innovative solutions, are paramount to the changes that we see about world economic activities. So those companies that are leaders, that are allowing you to, for example, to use a credit card, a debit card in so many different fashions. You can use your phone, you can tap it, you can insert it. But that is only the beginning of all of the changes that are going through in the financial services industry and how we purchase things. We think that secular trend is going to continue to drive some incredible growth opportunities, not just for the next 12 to 18 months, but probably for the next few years at least.
That is pretty amazing. I know when my wife and her friends go out brunch or dinner, they always use little apps and they're sending each other money, which I always find like that is just amazing that stuff goes on. There are some absolutely amazing tools out there. And speaking of technology and some great tools, hope you had a chance to check out the website wiscap.com. That's WISCAP.com. You can learn more about Tom and the team at Wisconsin Capital Management, learn a little bit about their investment philosophy and other things as well. Again, that website, wiscap.com. That's WISCAP.com. Of course, talking with Tom Plumb with Wisconsin Capital Management. You may recognize Tom's voice if you are a regular listener of Bloomberg and other things. Tom's been featured on their programs several times as well. Great to have him along here on 1310 WIBA. We're going to continue our conversation with Tom, talk a little bit more about his investment philosophy as well as the investment philosophy at Wisconsin Capital Management, and we'll take a look ahead as well. We will do all of that next as Ask the Experts with Tom Plumb and Wisconsin Capital Management continues right here on 1310 WIBA. 1310 WIBA and Ask the Experts with Tom Plumb of Wisconsin Capital Management. You can learn more about Tom as well as Wisconsin Capital Management on their website, wiscap.com. That's WISCAP.com. Tom is with Wisconsin Capital Management. Before we talk about investment philosophy, although I'm guessing this next question ties in with that, CFA, for folks that don't know, what is CFA? What does that stand for? And what makes that designation unique, Tom?
So CFA is a Chartered Financial Analyst. So that's a designation that is pretty significant, I think, for the investment community, because there are things like CFP CFPs, which are certified financial planners, but we emphasize analysis. And one of the reasons I touch on that is because a lot of times financial planners use correlations and try to diversify things based on historical relationships. And a lot of historical relationships that they look at from the surface basically fall apart by the time they are recognized. You really need to analyze how things interact, why they interact, and come up with a strategy about how those interactions are going to affect portfolios going in the future. So we often say there's a thin line between diversification and diversification. Spreading your assets too thin doesn't really reduce your risk, not if you don't know why assets correspond, why they don't match up, what's moving the underlying fundamentals. So that's why we've been very happy to be viewed as analysts and investment advisors. Certainly financial planning is an important aspect of what you do for individuals, but we think that you need to go much deeper if you're going to truly provide value to your clients.
Really great information. I learned something new all the time, Tom. Really interesting stuff. And I've got to guess, as we talk then about a little bit about your investment philosophy, being a CFA plays into this, and we think about how Wisconsin Capital Management, how your firm emphasizes that balance and diversification. Let's talk a little bit about how that philosophy, how that plays out when it comes to your portfolio strategies, Tom.
So what we've seen, and it's gone for years and years and years, is that rising interest rates actually are negative, obviously, for the bond market, because if I agree to buy a bond, it pays 4%, and then next month rates go up to 5%, my bond is worth less in the current market, even though I will get, hopefully, if they're a good credit, you'll get your money back at the end of this period of time. Stocks tend to have some relationship with interest rates, but they're also driven by underlying economics, and I call microeconomics as well as the macroeconomics. So our view is that stocks, over time, equity investments, even if it's real estate or if it's the stock market, that you have the potential to provide the best long-term returns. The question and the problem is that they are volatile. And as we all know, you go through some periods of time when stocks go down. But if you look at a company like, the largest two companies in the world, Apple and right now it's NVIDIA, those companies have many times gone down 10 to 20% in market price. If you've held them for the last 20 years, 15 years for Apple, for example, NVIDIA wasn't even a player 15 years ago. But those stocks then have gone from, in the case of Apple, equivalent to $6 in 2011 to $200 today. You have to go through those cycles to get that return. You don't get a double on a stock if you sell it after 10% or if you sell it after it goes down 10%. So again, focusing on the fundamentals. Why do I own this company? Why do I think they're going to be successful? Watch them very closely. Make sure they're executing. So with that, then the question is, how do you offset that volatility so people can be comfortable being long-term investors? And with that, you have to sit and talk to your clients, know what they can tolerate, and not just asking them when everything is going well, oh, how would you feel if the stock market went down 10%? They all would say, well, that wouldn't be so bad. Well, the fact is, when it goes down, you're caught in those emotions. And you need to have a portfolio that's constructed to modify or reduce that emotional impact when the markets go against you, allowing you to use your head investing rather than your stomach.
Talking this morning with Tom Plumb of Wisconsin Capital Management. Of course, Tom Plumb, CFA with Wisconsin Capital Management. Don't forget, if you have missed any part of today's program, we'll have the podcast up for you right after the show. You can also share it as well. You can learn more about Tom and the team at Wisconsin Capital Management all on their website. It's a great day to get to know Tom and the team. All you got to do is head on over to the website, WISCAP.com. That's WISCAP.com. Think Wisconsin Capital Management, WISCAP.com. Of course, this is Ask the Experts with Wisconsin Capital Management. And Tom, before we wrap up this week, I think we kind of touched on it a little bit here as we talk about a little bit about the investment philosophy. You hear from folks, there's some mistakes out there that folks can make. And what do you see as far as those mistakes that individual investors are making? And are there ways for them to be avoiding those mistakes?
Well, the first thing is make sure that you have a fundamental plan. So you're going to pay your taxes, you're going to earn your income, but you should also think about paying yourself. And time and the amount you invest are going to be key factors to your long-range financial security. The mistakes that people make is that most often when the markets are down, it's because the news is the worst. And when there's bad news, people get emotional. And so you often see someone sell a stock because everything's going down, not because that company deserves to be sold. And that mistake pushes a lot of people into having total returns much lower than the markets they invest in. So from our perspective, it's really understanding and making sure you've, in advance, structured a portfolio that you feel comfortable living with. You have enough funds to get you through the times when the stock market or the bond market go against you. And you allow your investment strategy to play, because time with the compounding rate is the true builder of wealth.
Well stated as we talk this morning. A lot of fantastic information. Tom Plumb, CFA with Wisconsin Capital Management. This is Ask the Experts with Wisconsin Capital Management right here on 1310 WIBA. Tom will be joining us each and every week at this time. Definitely want to make sure you mark that down. And, of course, if you miss any part of the program, you can always listen back to the podcast. You can share that as well. You can learn more about Tom and everyone at Wisconsin Capital Management on their website, WISCAP.com. That's WISCAP.com, WISCAP.com. And, of course, Ask the Experts with Wisconsin Capital Management is right here on 1310 WIBA. Tom, thank you so much for taking the time this morning, and I look forward to talking to you again in 1 week. Till then, you take care.
Well, thank you, Sean. It's been a pleasure chatting with you.
This is Ask the Experts right here on 1310 WIBA.